So in terms of how we're seeing investing, I did just want to make this point because many of you are looking at businesses and how you get funded. And so as venture capitalists, we look at risk reward. And what is increasingly happening, and I'm talking the royal we now in terms of the venture capital industry, not necessarily Mayfield, we're very interested in deals where we can get in early, get a reasonable ownership, add value to the company, and get a fair price deal. We're also and those deals are obviously relatively more risky because you're early, you don't know how a company's going to be developed, you don't know how the market's going to grow. We're also interested in investing late. So where there is more traction in the company, there are sales, there are customers, higher priced, less risk because you know the product or the solution works. In the middle, difficult. It's difficult today to get some of these B deals financed, which was traditionally quite a sweet spot for investors, because we're concerned, particularly when you're looking at a consumer-orientated deal, if you don't know what a consumer is going to like, and with a consumer product, you get it out there until a consumer says yes or no. You don't really know how well it's going to go, and it's difficult to tweak a consumer product, unlike software, for example. So it's risky. So you'll go in early and get the ownership. But in a middle stage deal where you need more money but you haven't yet proved the concept, is much harder to invest in today. So if you're involved in companies like that, I would encourage you, if you can't get sales milestones, to get some milestones to prove somehow the concept that you have developed. Or when you get money in early, get enough money to take you to an appropriate milestone. Because that middle ground is really tough and getting tougher.